But we have Paul Hunyor from Wollemi Capital, based in Australia. We have Sara Ahmed from the V20 and the Climate Vulnerable Forum. And we have a new panelist joining us today as well, Frankie Muscovich, Executive Director for Policy for IGCC. So having this event at the pavilion today is really important. Obviously, we're at COP30 in Brazil, the lead into COP31, hopefully in Adelaide next year. Welcome on down, Estelle. Come and join us. And it's really important to really look at, we deal with adaptation and resilience in our work at IGCC with investors in Australia. We do that in Asia as well. But it's really important to look at how we work outside our own boundaries, across the supply chains, across the region. And what are the impacts of climate change going to be on those supply chains? What are the impacts now? And how are we going to address those through, sort of from the policy level, through the financing and investment levels, and down to the corporate level. So we're going to get into that discussion today, but I'm going to kick off and just get everybody to introduce themselves and their work in this space, just to provide a bit of context for the discussion today. So Paul, I'll hand over to you to take us through Wollemi's work.
Thank you, Beck, and thanks to the IGCC for putting together and hosting this important discussion, and thanks for those that have joined us. As Beck said, I'm on the investing side, so Wollemi Capital is a climate specialist investment firm. We only invest in businesses and projects that are focused on decarbonisation. Having said that, given that this topic is all about supply chains and as much about adaptation and resilience in addition to mitigation, I will say that from an investor journey, everything that we've invested into first and foremost has to have measurable GHG reduction a component. But over time, what we've found is some of the adaptation work is surprising us on the upside. To give but one example of an Australian business that has operations now here in Brazil, we've invested in a business that's an ag tech company called Loam Bio, who have a biological inoculant for crops, wheat, soy, barley, and here in Brazil for corn. And that biological inoculant, when a farmer applies it to a seed, captures carbon in the root structure of crops and ultimately in the soil in quite a permanent basis. And so it increases soil carbon sequestration. Over time, though, what we've actually found is that it also increases water retention. It also increases, it decreases reliance on fertilizer and ultimately increases yield. And so when we think about resilient crop systems that are able to cope with the worst excesses of climate change, it's interesting for us to see that some of these technologies that are first and foremost often focused on carbon are also instrumental in this instance, Brazil building more resilience in our food supply chain. So that gives you a little bit of a sense of the type of work we're doing and interest in this important topic.
Great, Paul. Thank you. Right, Sara Jane, over to you. Keen to hear more about your work with the forum, just for people who may not be so familiar with it.
Thank you. So the Climate Vulnerable Forum and V20 is a group of 74 climate vulnerable countries across Asia, the Pacific, Latin America, the Caribbean, Africa, and the Middle East. The presidency is Barbados, led by Prime Minister Mia Mottley. And in 2021, they took the decision that it was time to translate a lot of these NDCs, National Adaptation Plans, into investment strategies. And so then came the climate prosperity plans, or these climate prosperity strategies. And what's critical here is it's fully costed roadmaps, but at the same time it includes business models and entry points for the private sector. It also focuses on value addition, just because a lot of what happens in our countries is we export raw. And we're at a point where there isn't really much fiscal space. The cost of capital is really high. And the only way to really get out of this is to grow our economies in order to invest in public sector adaptation. So private sector participation is very critical. And so we're also working on these green industrial zones or green economic zones, where we hope to bring in private sector to support with bringing in new technology. So for example, in Bangladesh, one of the net zero zones brought over a cotton, I guess, yarn making, and the country used to import 100% of cotton despite also having jute and other things raw. And with this new company coming in, they are able to competitively displace 60% of imports immediately, just one factory. So there's huge opportunity in our economies for this.
Fantastic. I have lots of questions to follow up with, but we'll get to them. Just over to you, Frankie. I'm keen if you could just outline, we might need to share mics perhaps. If you could just outline the work that IGCC is doing in Australia. I know you're a little bit new to the job, so putting you on the spot a little bit, but I know that you've dived into that space, and obviously there's a lot of that adaptation resilience focus sort of here at COP. So where does the Australian piece fit in?
Yeah, I mean, I think it's really significant that we've just had the first really sort of sophisticated approach to mapping climate risks across our country. And we've got those 8 different systems that have been identified. We've got a national adaptation plan, which is a little light on in terms of commitment to, actual policies to implement. But what it does do is start to identify some of these interdependencies between different sectors. And so I guess the interest that I've got in this conversation, and particularly some of the things that you were mentioning there, Sara, as well, if we're sort of to host COP31 next year, and just access to finance in across the board, and there's where some of the negotiations have gone early on around 9.1, for example. I'd just be really keen to understand where from your constituencies, where some of the policy effort needs to happen, because I think as to be a credible host of a COP in partnership with the Pacific, it'd be, I think, really good for Australia to start putting out some proactive policy in that space to support our Pacific neighbours. That's my interest in this.
Thanks, and we'll get to that policy question in a second. I'll just quickly frame the work that we're doing in Asia, just to kind of pull it all together, and then we can sort of start to dig in where those interconnected parts can be or are, and where we need to do some more work. So at AIGCC, we have a physical risk and resilience working group, and for the last couple of years, we've really looked at, we started with what are the tools that investors can use, particularly in the Asia region, that are relevant for them and their portfolios and the companies there. And then we did some work on investor expectations around the National Adaptation Plan process. And we presented that at COP 2 years ago. And that was sort of really that sort of, an early injection into that process from the private sector to really try and bridge that gap and try and, join those conversations and what investors need to see from that process. And so we've started to see, a few countries and markets are starting to put out their national adaptation plans. And then that gives us something to engage on with those expectations out there. And then we can start to map, as you were saying, Sara, what are those investment entry points for investors, and starting to match those things up a little bit more. And I think maybe coming back to the region and getting into some of those sort of policy questions, I guess from your perspective, I guess the policy piece is quite common across the national adaptation plans and how people are approaching that. What do you see, Sara, as what are the policies that you need to see, or what's starting to work already? And then we can get into a bit of a conversation around that. And I'm keen to, if anyone we can make this an interactive session. So if you have questions as we go through, please just put your hand up and we can just start to add that into the discussion as well.
Thank you. So I think first and foremost, the policies within the NAPs and the NDCs have to match or have to enable maybe green industrial policy. Where at the end of the day, this is about trade development. And in terms of what we're seeing at the COP, a lot of the funds are delivered through many intermediaries, and it's very service-led, let's say, by external actors. And the last 2 decades, we've seen that as a result of that model, our local and national institutions have been starved of capacity because others are just kind of doing the work, handing it over and saying, good luck, go implement. But what we actually need to do is have honest to goodness partnerships and capacity where we work with, the country institutions, but have them, be there and drive it in the trenches as opposed to someone telling them from outside what to do. And I think we should really learn from the private sector because they would never invest in a market without having boots on the ground or engaging in the country. They would never risk their capital like this. And we have to do the same, I think, with resources coming out of climate finance, that it really goes to the countries as much as possible so that we can actually invest our way out of this as opposed to this one-way street. And we need enterprise, we need partnerships from private sector in Australia, in other countries to come into our markets because it's the best way to generate new jobs. And at the end of the day, youth employment is what's driving a lot of instability in our economies.
Yeah. I'm keen to bring in, I think this comes to the importance of the national data sets that we need to see. And Frankie, maybe to go to you on this, I think to connect that bottom up, we've just had the National Climate Risk Assessment released in the Australian context. Can you just go into a bit of the coverage of that and how that sort of can connect into that bottom up piece as that starting point and why investors have been asking for the National Climate Risk Assessment and the data so that they can then do that next piece of work, and then maybe we can get into what investors are doing on that front.
Yeah, I mean, it's a really impressive piece of work. We've seen our scientific and research organisation, Sara, our Bureau of Meteorology, do some very extensive mapping. So across the country, you can go down to basically populations of 5,000 people and be able to filter for different climate hazards. And there's a range of scenarios that have been looked at. So, I mean, that's starting to answer some of the questions that investors are going to have around what are the key risks I need to be looking at in different asset classes, in different parts of the country. But it's also we need to get to the point as well where we can start to complement that with asset level data as well. So we'll be having really interesting conversations with new, more private sector data sets or things like really great smarts in AI and things like that have done mapping across buildings across the country and can show that actually, in an area where there's a higher risk of flooding, some of these assets are actually much more resilient because of the way they've been constructed. And so, there's a need to get even more granular over the next little while and start to complement some of those public sector data sets, which are pretty sophisticated now, with private sector. And I think that's where you're going to start seeing, hopefully, some of the the benefits flow through as well. Because I think one of the problems we've got, given we are very much at risk to different hazards across the country, particularly flood and fire, is that insurance costs and premiums have increased significantly over the last little while. And so to the extent it's possible to be able to demonstrate that you've mitigated that risk, or the attributes of the asset that you own are more resilient, then there should be a benefit that flows through. And that's sort of going to be critical for investors in the long run when they're, I think, probably at the earlier part of the journey in understanding physical risk across their portfolios. And so I think we're going to be on this journey of discovery over the next little while as we start to connect all these different data sets.
Just on the point around insurance premiums, there's a great example, and that's just come into my field of view recently in Hong Kong. So Link-REIT, a real estate investor, was working with an insurance company to look at the asset and how to make the asset resilient in Hong Kong. And as a result, they got, they put some more, they retrofitted the asset, a shopping centre in Hong Kong, and as a result, they got a lower insurance premium. and because they've got a resilient asset. So, there's good examples where that's already happening. Shopping centres is a big one. I think, it was the first example I heard of, and not just, from the investor perspective, obviously that's really important to protect the asset, the ongoing insurance premiums, which are only going up, as Frankie said. But actually it becomes a piece of critical infrastructure for the local community as a place of refuge. They've got power, they can, maybe they can bring cars, they can put their cars there, it's a place of refuge, literally food and water if that's needed. So that's really important as a piece of critical infrastructure. That's assuming, of course, though, that the roads around it are also resilient. You can actually get to the shopping centre, it's not a stranded asset. So, that it comes back to the point where, when we talk about physical risk and resilience, it's such a localised issue. We have to take it down to the specific asset level, the community level, but then everything around that, how that works, the mobile telecommunications, the transport, everything. So it's, which brings it back to why governments, local governments, state governments, federal governments have to be so, it needs to be such an integrated approach, but I think we're only kind of getting started here. Certainly investors in the last couple of years have been doing their scenario analysis, running that through their portfolios, identifying the risks to their portfolios across all asset classes, and starting to dig in a little bit deeper. These national climate data sets will help that much more. But we've seen the investor response, I think, in the last year actually double in the Australian context. So they've been analysing their exposure to physical risks, and they've been doing that for the last couple of years with the scenario analysis piece, but actually now implementing a response to that has now jumped to, I think it increased 40% in the last year that we did a survey. So quite a significant uptick from Australian investors in how they're now responding to those risks at an asset level with more data and granularity. So that's an encouraging sign. And in Asia, yes, we're starting to see that tick up a little bit as well. A little bit further behind. But yeah, we need to start matching up those national data risk assessments and what's actually materially useful for investors sort of at that asset level and joining some of those gaps. But Paul, I'll just come to you on that. So like the national national risk assessment in the Australian context, some of your companies, can you see that link yet? How useful is that for you at this point, or have you already done that work? You're looking at those companies and some of them have resilience built into them. You gave that example before. What are some other examples of some of the businesses that you're invested in, and how do these sort of top-down policy signals, where does that connect in?
What we're actually seeing often on, say, the demand side of industry transformation, let's take, hi Danny, it's good to see some new people in the audience here as well. What we're often seeing with, let's take the fashion industry, for example. Much of the clothing that many of us wear is full of plastic, be it nylon 6/6, be it polyester, and so is ultimately a huge and important industry for the fossil fuel industry. When we think about creating a more circular economy in fashion, it's actually incredibly difficult to do, but it requires leadership from leading companies to think about some of the risks associated with that. So let's take Lululemon, for example. They've made some pretty serious commitments about the percentage of their clothing that will need to be genuinely recycled, not end-of-life PET bottles that is once only, but a nylon or a polyester that could go back into itself and stay within the fashion supply chain. There's an Australian technology business that we've invested in, based out of Canberra, called Samsara Eco, that has a groundbreaking technology for the enzymatic recycling of nylon 6/6. World-leading technology. And their demo plant is in Jerrabombera, Canberra. Now, to Sara's point, in terms of partnerships and collaboration that's needed, we can't invest in an Australian technology if it's not linked to, say, Lululemon offtake. So that was one of the first things they announced. Then the next question becomes, where are the factories at commercial scale where this technology will be utilised? And they happen to be in Southeast Asia and China. So then we work with our friends from Singapore, for example. So Temasek has come in and invested in this business and collaborated in terms of providing pathways and knowledge for how to collaborate with the commercial operators when it comes to setting up an at-scale plant in, say, China. And so it takes a village. You know, these global supply chains are incredibly complex. It's hard enough to measure the scope 3 emissions of them and break it down. But at its core, what it requires is a village of collaboration, even on the investor side, cooperation, and a bunch of different industry actors as well as government bodies to, I guess, collaborate on the way they think about risks and transformation of industries like that.
Yeah, great. So it's, I mean, the reality is you just have to force it from the ground up. It's just how quickly or how slowly it will go when you reach a new barrier that you have to then do that and then find another person, and then what is that pathway that needs to be laid out in front? And then that's the piece that we need to accelerate and really scale up. But I think it's important that we tell, we need to talk about these case studies. We need to talk about what's working. We need to bring in all the actors and hear from everybody what they're doing kind of along each piece of this. Sara, I'm keen to understand from your perspective, how do you connect in with, so you're doing this sort of very bottom-up grassroots level. So I want to sort of talk about the sort of getting to the scale and aggregation piece and where that might already be happening or not. And I think about the Green Climate Fund, for example, and I think about other platforms that might be looking at aggregating projects up so that institutional investors can get some access to that. Can you talk about where those linkages might be already, or what might we need to do to get more of that?
Yeah, thank you. So the Green Climate Fund, I think what's interesting about them is the resources that is going to project preparation. They are now seeing it at that level, at the portfolio level, where countries could use readiness money from the GCF to actually design this bankable pipeline of projects and programs. And so part of what we're doing with the climate prosperity plans is exactly that. For example, Pakistan and Sri Lanka in particular have, I think, over 100 projects in their climate prosperity plans at the province level, and there's clear themes across the different provinces and areas. I think the critical thing really is we need more risk capital. GCF is one of the few areas for that, and I know that there's another fund that was set up by philanthropy with ticket sizes of about 50 million going into funds of funds. But really critical that we find new ways to get risk capital. And it's not that they're there to lose money. They might actually make money because it's junior equity anyway. And so, so I think we need more of that to entice new investors to be more comfortable. And hopefully after, first couple of deals, they will not need that risk capital. They could just keep going. So yeah, so the GCF has switched up quite a bit with new leadership.
Yeah. I'm keen to throw to the audience as well. So if you have questions you want to throw into the panel, put your hand up and we'll come to those. While we're waiting to see if people want to come in, Frankie and Paul, Frankie, IGCC is doing some work on the government special investment vehicles in general, but on that, on the resilience front, what do you think is needed there, missing? I know someone from Arena was here before, so we can't get them to chime in, but yeah, keen to sort of for you to outline, what are the special investment vehicles, what are they doing, what else needs to sort of happen in this front in the Australian context?
I mean, it goes to some of the points that Sara's making around the need to just de-risk that investment and not just domestically, but also with our partners in the Pacific and the Southeast Asia region as well. So we started looking at we've got this ecosystem of public finance in Australia. We've had these special investment vehicles that have been stood up to support, largely the energy transition, if you think about ARENA and CEFC, but more recently industrial decarbonisation with the National Reconstruction Fund. We've got a lot of these bodies, and their mandates are sort of overlapping. If you look at where they're sort of deploying their capital along the sort of commercialization journey, much of it is happening, the vast majority of capital is deployed at the sort of commercialization deployment scale, large scale rollout, and comparatively much less at that sort of early stage VC, higher risk projects, where actually you want public finance to come in and de-risk it. So it does look to us like there is a bit of an imbalance there that needs to be addressed. we've done some analysis, and I think one of the things that we're thinking about, especially given like the moment where we are, we've had sort of the last 10, 15 years, and these CIVs have done like a really good job at what they were put in place to do, but the next 10 to 15 years doesn't look like the last 10 years, and actually if we want to sort of seize the opportunity that's in front of us, not just in Australia but for the Pacific, is that we can play a role in decarbonising not just our own economy but like regional supply chains through our exports, and so we need to take a really intentional approach to the way we set up our public finance system to support that. And so I think part of what that looks like from our perspective, and adaptation is very much a part of this. I think it's significant to note on the way through that really all of our special investment vehicles don't have a mandate to invest in adaptation measures. Like there would be examples of mitigation projects where there are co-benefits, but it's not sort of, kind of written into the mandate of these CIVs. So that's something that needs to be looked at. But we'd also, we can see a value in starting to shift towards more of a fund-to-funds type approach. So you've got, with an overarching body and objectives that kind of align with where government's priorities are. So the sort of twin priorities are, yes, energy, but also the industrial, sort of future, right? Like global competitiveness is now tied to who can produce the cheapest, cleanest energy and how you can add value to that through the manufacture of goods and services. And that's where the AI piece can come in. So like long term, we need more capital focused on the early stage, so small companies that need to get scale and de-risk, and we need to rebalance our system towards more of that, maybe less so on the, the sort of high volume deployment. That's where Paul's money should be coming in, and where Australian super funds and other big institutional investors can play a role. But yeah, so I mean, we've started to have these conversations, so really kind of doing the work to map out what those longer term priorities are, and then aligning the finance, sort of along the capital stack to make sure that we've got the right, the right kind of financial mechanisms to deal with that, and you're targeting the capital in the right spots.
Yeah, I think there's... Paul, did you want to come in on any of the sort of where that, from your perspective, where that's helpful or not, and whether Australian or sort of broadly?
Sure. Well, as an overarching comment, I think this COP has been very action-oriented, and there's been a lot of emphasis on it's just deploy, deploy, deploy. If we are hosting an Australia and Pacific COP, I think you'll see a continuation of that action orientation and bias, and from deploy to probably deal announcements. And I'd like to see announcements that involve blended finance with government entities to deploy proven technologies like decentralized battery storage. ARENA was instrumental in the support of battery storage in Australia, but it's now there for private capital to deploy at scale. We're investing in sub 5 megawatt hybrid battery and solar sites in Australia at scale. I would like to think that in a year's time we're also doing that in the Pacific and elsewhere. You mentioned the solar boom in Pakistan, and obviously what should happen on the tail end of that with decentralized battery storage, as we've now seen in Australia with government support for household batteries. So I think there's a huge role to play in terms of another example where ARENA in Australia is critical in supporting things that are at the technology inflection point, just there on the S-curve, so industrial heat and storage. Or you take electric trucking. Electric trucking is already there for a fleet of 50 trucks. It's cost competitive, in fact cheaper from a 10-year life perspective than a diesel truck in a jurisdiction like Australia with our price of diesel. But it's not there for a fleet of 20 trucks. And if you're building out your first business in that area, you're going to start with 5 truck trial, and then you're going to have to scale to a fleet of 20 on your path to 50. ARENA is vital for unlocking the 5 truck trial to give confidence to crowd in private capital to scale to that 20, to get that institutional superannuation money to scale to fleets of 50 plus. So these organisations are vital, and I think our COP here and next year needs to amplify and showcase, have this sort of deal bias and orientation and action orientation. So let's take things that are already ready and are already on that inflection point and just accelerate them through that deployment curve.
Perfect segue. I was going to go, okay, what about the COP process? Let's get back to the COP process. We're here moving to COP31. Sara, back to you. What are you looking to get out of this COP this year? And kind of to Paul's point, how do you see that working into COP31 next year, hopefully in Adelaide in Australia?
I think coming out of this COP, what would be useful is clarity on the public sources of finance. The reason for that is country balance sheets are stretched thin. There's very little fiscal space. And there are 2 ways to change this. One is public sector funding comes through from external sources, or we change our debt sustainability analysis. And we find ways to, and I know that there's a lot of discussion also around these debt for resilience swaps and things for fiscal space. So that's one side. The other side is really to your point on these deals. We have to actually come out with deals that are scalable. So to your point on the batteries, I think something that we could look to, just because Australia Pacific, would be if the Pacific together with their utility companies and operators do a joint procurement around batteries, around solar, so then that way they get some benefit on the project economics of shared procurement. But I think that's sort of the areas of innovation that we need to bring in, looking to the next COP.
I know I know we've got Ilona in the audience here that's doing some work with the Pacific Resilience Facility. I think that's something. Happy for you to come in, Ilona. You're closer to it than I am, but I know that that's something they're looking to to do in the future. Did you want to make a comment on that? Is that sort of appropriate to talk about what they're looking to do and how they're looking to scale up? I think it's an important thing to highlight.
I'm happy to talk about the Pacific Resilience Facility. It's a really amazing example of innovative climate finance to fill the gap that we have between the way that climate finance is traditionally delivered to developing countries and in particular SIDS. There's a couple of key issues with climate finance in terms of ensuring that there's predictable finance, that it's accessible, that it's scalable, and that it's focused on adaptation and resilience, which is a big gap in the finance piece. What the PRF is looking to do, and it's just recently been sort of established as a new international financing organisation, which the treaty for that was signed in Hunyor in September, once it has 8 ratifications out of the 18 Pacific Island countries, it will enter into force as a new legal entity. But in terms of the structure of the facility, it's a $500 million facility that will be an investment facility. So that money is invested, it's managed, and then the return on investment is what will then be used to deliver community scale projects and resilience support and disaster reduction and sort of support to Pacific Islands. So, you know, what we've seen with other sort of sovereign, I like to describe it as a sort of sovereign wealth fund for the Pacific, because, you know, it's collectively there to support all of the vulnerable countries and SIDS. But, you know, if you look at, for example, I think it's Kiribati's sovereign wealth fund, started with $500,000, it's now $1.7 billion. And that's because of the way that money has been invested, and that they just take a little bit of the return to go back into economic and climate development. But it means that they've built that out. So the PRF is doing the same thing, but it's doing that for all of the Pacific Island countries. And then with a very clear goal in terms of addressing those issues of predictability and also accessibility for the most vulnerable.
is there anything what's the PRF looking for? Is there a call to action? People online on the YouTube, what do you need?
In terms of the call to action, what the PRF is looking for is funds to capitalise the PRF. We're at, I think, about $167 million of that first 500 that is to be raised by the end of next year. And I think it's, again, that transition to COP31 in Australia. Being able to showcase the PRF fully capitalised in the region would be wonderful.
Fantastic, so great. We could bring that example in. I'll come to you, Paul, first, and then go to Frankie. So you touched on the COP piece. What do you think that road into COP31 sort of looks like? I know you mentioned a few things already, but what do you want to see for your business and then Australia and on the resilience front or more broadly?
I just think it's an incredibly exciting and important moment. It's often said, we've had plenty of discussions here about Australia projecting itself as a renewable energy superpower. But what does that really mean? It means a hell of a lot by way of proof points on collaboration and getting out of our own backyard and deeper into the Pacific, into the region and global interconnectedness, and actually showcasing. I was actually speaking to our Sophie, our ambassador to Brazil earlier, and she said, I'm aware of the 150 Australian companies that are operating in Brazil, and I said, have you heard of this business that we've just invested into recently? No, I hadn't. And so there's actually more occurring in terms of interconnectedness, collaboration than we're aware of, and even Eleanor's just example just then on this Pacific fund and stacking. And so I think what I would like COP31 in Asia, Pacific and Australia to really represent is that momentum from the deployment COP to the deal and collaboration COP with a global mindset.
Great, love that. Frankie, what's IGCC looking for from the Australian investors? What do they want to see from this COP and going into next year?
I think we've got some really exciting collaborative work that we've been doing with a range of other groups and our members. There's a few different planks to it, but I want to focus on the climate finance piece, but also green trade as well, because I think that's really crucial to what we're talking about. So I don't think it's credible that Australia can host a COP in partnership with the Pacific and not have a flagship initiative on blended finance into the region. So I think we'll certainly be advocating for that. I think we're trying not to be kind of too prescriptive about where a facility like that would sit, but I think because of the role that we play in the region, it would make a lot of sense to focus on emerging markets in the Southeast Asia region. And I think just being really clear that we have more grant-based support in the Pacific, but there is more work to be done on adaptation finance, especially. I think as Alona said, and we've said, there's a huge gap in our public finance ecosystem around adaptation. So we'll be seeking an outcome on adaptation finance, but also I think for transition finance, like a flagship initiative for blended finance in the region. I think we hope we'll get a lot of traction. The other, I think a huge opportunity is to really kind of put a rocket under the Future Made in Australia agenda and think about, using the eyes of the world, on us and our region to say we're open for business, we want to invest, but we want to partner with our key trading partners. And so, I think we're all conscious of the fact that we still don't exactly know where next year's COP's going to be, and with the kind of runway we're going to have out to the end of next year, my hope is that we could land some deals. We could have Australia really put some diplomatic effort into working with a couple of key trade partners in the Asia Pacific, probably focusing on the commodities that maybe are the most prospective, so particularly green iron, and try to build a bit of a platform that's open and inclusive to other countries, but it's focused on really Australia kind of seizing the role to play that kind of decarbonisation force in regional and global supply chains. So I think that could be a really flagship initiative that comes out of a Pacific COP.
If there's any sort of a question from the audience before we close, but I might just touch on, I see we have a Japanese life insurer in the audience, a friend of ours from AIGCC, and I guess just from the Asian perspective, coming into this COP and moving into COP31 next year, Asian investors from Japan, Korea, China, Indonesia, Singapore, all over the region, support a COP31 in Australia. They see the opportunity for Australia to help decarbonise the region and the world. We're doing a lot of work across supply chains, across whether it's oil and gas or iron ore, metals, green iron, steel supply chains. We're doing a lot of that work with investors, really trying to go, what are the sort of the industrial policies in Australia, with our trading partners in Japan, Korea, China? What does that look like? What does onshoring decarbonisation into Australia look like with those partners? And what are the demand signals we need to see from the big corporates in those other markets? How is that translating into action in Australia? So we're trying to join those dots up a lot more. And on the policy side, I think we've got a national adaptation plan baseline assessment across 9 Asian markets. It's on the AIGCC website so that we can see the progress across different markets in Asia and really start to map that. We've got a program, investor-led program, we're engaging with markets in Japan, Korea, China, all over the region on their national adaptation plans, how we make them investable, as you said before, Jane, where are those points of intersection? And I think one of the investor expectations around those national adaptation plans is, as we've heard about, the collaboration piece. The government needs to work with investors, the private sector, to co-design what that looks like so that we can actually get the blended finance facilities, so we can actually start to scale some of these bottom-up companies, some of those early-stage investments that are working really well. You're forcing those supply chains to work kind of at that bottom-up level. But how do we match that with the top-down policies so that we can really unlock that scale for more companies and really pave that road sort of much faster? So, we've seen some of the deals. I love the deployment to deals, from deployment this year to deals next year. We've got some great examples that we've heard about in this pavilion. The Tokyo Metropolitan Government issuing a resilience bond aligned with the climate bonds taxonomy. 120 investors, 7 times oversubscribed. There is huge demand out there for these types of investment vehicles, and this is where the subnational governments come into it. They can aggregate projects up that are critical for their infrastructure needs right there and then. And I know there's some early stage, very exciting work that some local governments in Australia are working on at the moment that are kind of looking at first of its kind. There's the Kimberley project we heard the other day, so there's Indigenous projects as well. So we're working this across so many angles, and I think there's so much work being done, but it's about how we pull it together, how we talk about these case studies, and how we get it to actually to sort of larger scale deal flow is really critical going into COP31 next year. There's a lot of focus on adaptation here at COP30, but everyone said next year COP31 has to be an adaptation COP as well. But we need to see that deal flow, and we've got that Pacific leadership. They know how to be the resilient because they have to be. It's existential to them every day and every week. They're trying to recover from these disasters. So it's that incredible opportunity to see that Pacific leadership, learn from that, use the Australian decarbonisation opportunity that we have, and bring that region in. And I think that is the strongest case for COP31 next year. I think we've got that broad support from the region. So with that, I think we'll wrap up the panel. Thank you to the panelists here today. Thank you, Frankie, for joining us, for filling in for one of the speakers who was stuck in the lines outside. Thank you, Sara. Really great to hear more about the forum and what you're doing. And thanks so much, Paul, for joining us. So please join me in thanking the panelists here today. Thanks for joining, everybody.